Okay, sorry about that. Yeah, so so if you want to put a new line in Python and you put /n, this is like a new line character, and you actually, and if you print it, it says, "Hey Bob, how are you?" By the way, the thing that I was getting confused at is if you do in Jupyter Notebook, if you just say good stuff like this will actually print out the literal characters. I don't know why Jupyter Notebook does that. I'm not sure why, but anyway, if you type in print, which is the official Python way of doing it, right, to print to the command line or wherever, it prints the whole thing. But what if you had all these, like some other thing and some other thing? I mean, it's really hard to read. So what you can do in Python is actually you can do multiline like this. You can say, "Hey Bob, how are you?" Right? And then if you print this, yeah, it works, right? So the reason why this is useful is because what if we have a whole bunch of stuff that we want to print, right? So like that, right? I want to be able to see these columns, and it's, if I put /n and s plus /n everywhere, it's like kind of hard to tell. But this is more human readable, right? So anyway, so you get the idea. So we're gonna do some Pythonic magic. So list comprehension. If you guys aren't familiar with list comprehension, I won't give too much detail into it, but basically it's the same as a for loop. So let's say I want to be able to print this one by one. So I want to say for x in, and first thing we got to do is, well, we got to convert this into an array. And how do we want to do that? We want to split it, right? And with a /n. And if I print x, it notice that it prints that, right? So to make sure that make sure you guys don't think that I'm tricking this thing, right? And do that format, right? So it actually printed one by one because this thing prints line. But what happened here? There's like this thing here. So what do you get? And this thing here too is because this is actually a string with some stuff in the beginning and at the end, right? So this is like at the end. So what you have to do is first trim it, trim, I think. Was it that clean? I forget. Was it trim or? Oh, strip. Trim it PHP. Trim. No. What did I say? Oh, strip. Sorry. Strip. So now it actually prints one by one. So this is equivalent to saying x for x in good stuff. Let me just copy paste this. This is literally the same thing. Print x, right? It's literally the same thing. See, you notice it's like same. All right. So I want to be able to say asset columns equals that. Don't print. Just tell me what it is. Tell me this, and then if I press enter, and then if I print asset columns, it's just that, right? It just turned this string into this list. Nothing crazy, right? But now what I want to do is I want to be able to print these columns. So what I do is say NVDA BS and then asset columns, right? Dot plot. Now that I can see this trend, right? I can actually see what is going on. And the reason why you want to do this is because companies have issues. I actually wrote this down in my notebook, so I'm going to kind of reference it. So there's a couple of things you want to know, right? So account receivable is like how much do people owe you, right? So for companies like Starbucks, right? Obviously Starbucks. Let me see if I can find a Starbucks, right? I mean, like you're not gonna, nobody owes, like people, they don't have a huge account receivable because, people pay you right there, right? Like when you get it, I mean, you pay up front before you get the product. So it's not like, they're running a huge IOU to anybody. Whereas like a company like Boeing, right? Like when you sell these things, like, you're not gonna get money right there and then, right? I mean, they're gonna have IOUs, and Nvidia too. If you look at Nvidia, like they have account receivable too. Like, you know, it's in, you know, millions of dollars, right? I mean, you're not gonna run a company with zero account receivable. Even Starbucks, right? Even Starbucks, I'm sure they have some account receivable because, you know, just that's business, right? I mean, you buy stuff, you sell stuff, and you give people credit. You know, I'm sure they have account payable to their suppliers. Maybe if they, I don't know, like maybe if they do corporate accounts, maybe they give credit sort of things to other customers, right? So that you have to look at that, because account receivable, it could be a huge sort of an indicator of what the business is. Like, for example, like what's a good one? Oh yes, what's that company called? Salesforce. So believe it or not, Salesforce actually is a huge account receivable because they give incentives. Like, hey, we're going to charge you $250,000 a year to use our software. So it's basically incentivized sales, right? And you don't want to have a giant account receivable as a function of your asset, because that means you're basically incentivizing everything, right? Of course, it doesn't mean this is true for everything. Like some company, obviously retail is going to be much less. Companies that sell expensive stuff, big heavy stuff, they're going to have high account receivable. So you got to look at everything sort of one by one. Another thing is, let me look, kind of went through this list I wrote. Inventory. So inventory could make or break a company, right? So like a good example is like, what is that company called? Uniqlo. So this company is like, I don't know if you guys shop at Uniqlo. They have like super awesome clothes that are sort of like everlasting, so everlasting trends, and they don't really make anything that's trendy because I haven't really read their financial statements. But part of the reason why I think this stuff sells so well is because, one, they're sort of like practical clothes, and two, I don't think they chase trends, which means they don't have to constantly make new stuff, right? Because stuff can be obsolete very quickly, right? Versus a company like Zara. I haven't looked at their stock either, but I'm just assuming that Zara. I read the guy's history of like how he started the company and everything, and he says that he can get from the time of conception of the idea to, you know, to design, to manufacturing, to logistics, into the store within 2 weeks, which is great, except what if your stuff doesn't sell, right? If stuff gets obsolete quickly, right? And what do? Then you have to write it off. So that's one of the reasons why you have to look at this chart, because you want to know, hey, what's going on with the, you know, this stuff, right? Like, are you making money? Are you losing money? Is inventory clearing out, not clearing out? So you gotta definitely know by that. Let's see, and of course, these are all industry by industry and company by company. Like nothing is sort of like set in stone. Like, for example, like if you look at Walmart, let me see if I can look at Walmart. What's their stock ticker? WMT or something? Yeah. If I look at Walmart versus like Amazon, and it's slow today. So if you look at the data for Walmart, okay, I guess I thought they had it, but they don't have that. But if you look at, anyway, maybe I'll do a case study on them. But anyway, if you look at Walmart, right, like Walmart actually has this thing called, Walmart is a traditional retail. They actually buy inventory themselves, right? And they actually have to hold inventory, and that means they have to buy a lot of inventory. They have to keep it in their shops, and they have to, you know, basically sell it. And if it doesn't sell, they have to do all this clearance and stuff. So Amazon, on the other hand, so Amazon has this thing called FBA. I don't know if you guys know what that is. So I actually do e-commerce as well. So Amazon FBA is basically consignment. You sell them, you sell your products through Amazon, and they will sell it for you. The thing about this beauty of this model is that Walmart, they have to get financing to buy inventory, and they have to put it in the storage, which costs them money, and then to put it in this to ship it to their stores, And if they don't sell, they lose money, so they have to have a write-off. Luckily, you know, Walmart figured out all this stuff, so they don't lose a ton of money doing that. But Amazon, if you want to think about it, they were doing that, and then they started doing this called FBA, which basically means like small mom pops sellers, right? They would actually ship them their product, right? So they get the inventory for free, right? And they charge the sellers rent to put their stuff in the storage, and they charge them shipping. So if you think about it, Walmart pay for storage, pay for shipping, pay for inventory, but Amazon doesn't pay for any of that. In fact, they make money on storage, they make money on the sales, and they make money on shipping, right? Because they get bulk pricing from whoever they deal with. But now they're delegating the cost to the mom pops, right? I mean, this is huge. Like, this is like, I mean, I could talk about like how this can be, Amazon can be evil to small businesses about this, but anyway, it's a pretty brilliant model, right? Because now you don't have to spend money. How awesome is that? So you have to look at these trends, because this, you can actually figure out like what's going on, like when they start doing it, like is there a trend up, trending down. So you have to look at that. Of course, let's see other ones. Oh, I was gonna talk about turnovers, basically how fast inventory how fast inventory moves in and out. So it's like velocity of sales, but you know, we're still talking about balance sheet, so I won't talk about that. Oh yeah, and obsolescence is huge. Like, for example, technology companies, like what's a good one? Oh yeah, Nvidia is a good one. So Nvidia makes these things called GPUs, right? These things go like, oh, here's a good one. These things go out of fashion very quickly. Like, it's just like iPhone. Like, they have iPhone every year. Like, you're not gonna buy iPhone 1 ever, right? I mean, iPhone 10 came out. Like, are you gonna buy iPhone 9? Maybe some people will, but I would bet that most people want the 10, right? Because things get obsolete pretty quickly, and the reason why you want to graph these things so that you can actually tell, hey, did they have inventory problems? And is it the, of course, we're not looking for absolute numbers. We're looking for trends, right? We're not looking at like, you know, like, oh, this thing went up like, you know, $5 million. Like, we don't care about that. We're just looking at the trends. Let me see, what else was I gonna? Yeah. Also, too, you want to look at not only the good stuff, right, the assets, but also the liabilities. Are they getting more debt? Like, for example, REITs, like real estate investment trusts, right? So, REITs. Yeah, so basically REITs, like, they raise money from you, and you know, they buy properties and they operate them, they rent them out, and 90% of their profits have to get distributed to their shareholders. Now that means if they can't save money, they have to constantly raise money. So what does that mean? Their debt is probably going up, right? So looking at debt alone doesn't make sense, because you know, their debt could be going up, but what if their assets are going up faster, right? So that's one of the reasons why we're looking at this stuff. Anywho, so the thing I want to do is, oh, by the way, now this graphing that you're looking at, it's really hard to tell like what is going on. I mean, this giant legend is covering over this thing, and it's really hard to tell like what is what. You know, it can't really. Yeah, you could do all kinds of fancy formatting, but I am really lazy and I don't want to do that. Instead, what we're gonna do is just use this called Plotly, right? Let me see if I can actually show you a demo of Plotly. Actually, why don't I just do Plotly? So if you don't have Plotly, what you want to do is pip install Plotly. The reason why we don't use conda install Plotly here is because for some reason, I don't know if it's just my system, if you do conda install, it doesn't register. It doesn't seem, Python doesn't seem to pick it up correctly. So just use pip install Plotly. Okay, if you haven't done so. So what we're gonna do is obviously import Plotly, and what we're gonna do is, first thing you have to do is run this command plotly dot tools dot set credential, what is it, build file, and you have to set the username equals whatever your username is, and API key is whatever your API key is. So the way you get that is go to plotly.com, and you should have basically, you should be able to sign up. You know, it's I mean, I'm not going to go through the sign up process, but once you get it, you'll go in there, make sure you fetch the API key, and then you just stick it in here. The good thing is you only run this one time, so I ran mine, so I'm not going to run mine again. But you should, if you do that, you should be able to plot correctly. Okay, so actually, I'm just going to comment this out. So when you download this from GitHub, make sure you just put your information in there. Okay. So we're going to import. Let me just copy paste. This is really long. Import plotly.plotly as py and import plotly.graph objs as go. Why go? I don't know. That's what I saw in the tutorial, so that's what I'm going to use right now. So what we're going to do is we're going to plot out the assets, liabilities first. We're going to plot this stuff, but in a stacked bar, what do they call these? Yeah, stacked bar mode. So what is stacked bar mode? So if you go to stacked bar mode, it's basically, this is an Excel spreadsheet too, I think. Basically you have, oh, not this one. Yeah, it's okay. Yeah. Basically, we want to be able to see the assets and liabilities in this particular format, where you can see, like, it's, you know, everything. You can not only do you see the absolute, but you see the relative change of each. So it's actually pretty intuitive. So what we're gonna do is first we have to determine. So you have to actually create a data object with the x and the y. So x is obviously going to be the index, the time index, obviously. And I'm going to just show you instead of just telling you. Okay, so we're going to say, sorry, I'm switching so many screens right now, making me head dizzy. Assets equals go.bar, right? That's a bar object. And in it, it's going to go in the x, which is NVDA BS dot index. And then y is going to be, remember, NVDA dot index. Let me actually show you this, what this is first. This is just the times, right? I mean, nothing crazy. So, and y, we're going to print NVDA BS, and we're going to print total assets. All right. And we're going to do the same for liabilities. So we're just going to copy paste liabilities, right? And the shareholder equity, and I'm just going to copy this because I don't want to. And then, oh, the name, sorry, I forgot the name here. Name equals, we need a name so that the legend would would print correctly. And it is really hard to talk and think at the same time. I don't know how people do it on those other YouTube channels. Total liabilities and name equals yep, that's it. Okay, now what we have to do is combine these into a list, right? We have to say assets, liabilities, and shareholder equity. And now we have to tell it what layout you want. So you have to say layout equals go.layout. And we're going to bar mode, say stack it. Yeah, stack it. I want some those stacked potato chips. Those are good. Anywho, so now we have to just create the figure. This is pretty similar to Matplot, PyPlot, Matplotlib's whole figures and layouts, and it's pretty similar, I think. Go that figure, and you have to pass in the data, right? The data is just that right here, and the layout is just layout. layout equals layout, and you have to call pi.iplot fig bs file name equals, what are we calling this? Total assets and liabilities. Let me just copy paste this thing. Right, so if you press enter, it should do its thing, and ta-da! Now, I feel like I missed something here. Did I miss something? Oh, yeah. What I wanted to do was, this shareholder equity should not be a bar because this makes no sense. This should be scatter line. So now you see how it's like bars. What I wanted to do was actually have the line going across. Okay, this is better. Okay, now you see this more clearly, right? And it's interactive. You see like mouse over, you can actually see, and it actually has a time correctly formatted right here, and it has this. And the mapping is much better. And you actually could do it download as a PNG. You can zoom in. Yeah, I can do all kinds of cool stuff. I don't know what these other things are. Anyway, so you notice this green line over here, right? The green line is total shareholder equity, right? That you want that to go up, obviously. And remember, this is quarterly too. I mean, they're doing an awesome job because usually what happens is first quarter of every year it kind of like dips a little bit, but then this company just keep going up. So now you can see the reason why liabilities here is 0 is because the Symfin data is just missing for some reason. So maybe I'll ask Thomas about that. But anyway, not important. So you can see not only the trend, right, but you can see in the sort of the absolute sense. So if you look from here to here, yeah, it kind of went up, but in general sense, the liability stays within the same kind of amount of value, right? And if you look at assets, it's growing up, and the shareholder equity is going up too. So that's a good sign. Yeah. So why don't we do that for the same with the not the total asset. This is just a broad overview, right? I mean, this is just a better version of that, right? So now let's kind of do a breakdown of the individual columns. So now we're gonna say we're gonna do the same, but we're not gonna have this line. We're just gonna basically stack all the where am I? Yeah, right here. Basically, we want to be able to see all these things because we want to know if there's anything in there that we should be worried about. Like, for example, like, do you have any like crazy amount of inventory stacking up, right? Or is it pretty wildly fluctuating? Or account receivable, is it like relatively similar? I mean, is the growth sort of relatively similar to the growth of the revenue? Obviously, this is a balance sheet, so we're not going to be able to look at that. And of course, the cash and cash and other type of stuff. So we're going to stack these all together. So we're going to look at the following. Asset data equals just a list. And we're going to do the same thing. And we're going to say columns equals triple quote, right? And then the columns that we want, I'm just going to copy paste this, there's too many of them. Basically the breakdown of the assets, right? Nothing crazy, I'm just copy pasting. Now, I'm not going to get all crazy Pythonic and try to get all smart about this because it's really hard to read when you get too Pythonic. Like, it's like too smart. Like, I feel like sometimes you got to dumb it down a little bit. So anyway, so we want to say for a column in columns dot strip. Remember, we got to get rid of like here and here, right? Dot split. We want to split by a new line. We want to say asset bar equals the same thing as before. We're going to say go dot bar, capital, and we're going to say x equals NVDA BS dot index, comma, y equals NVDA BS dot column, right? We want to go from this one to this one to this one, right? And the name equals column, right? And what we're gonna say is asset data dot append asset bar, right? Right. Okay. And I'm just gonna copy these because this is the exact same as before. We're just gonna stack them. Gonna set the figure, and we're gonna plot it. And this is the total assets breakdown, right? So if I run this. Okay, so now you see it's pretty, right? It's nice and stacked on top of another. You can see that this is total assets, right? Total asset breakdown, right? Does that say here? Huh, doesn't say that here. But anyway, you can see that total asset base, like from here all the way up to here, right? The bars, like all the bars, the height of each bars are sort of growing, right? So that's good. Now what you're looking for is obviously trends. So like, what do you first notice here? Is this, first of all, this first thing I notice is this red thing is increasing. What is this red thing? So inventories is increasing. So is that bad or good? Well, oh, whoops. Oh, well, cool. I didn't know that. If you click on this, it actually filter it out. I mean, I don't know if you guys can see. Oh yeah. So I don't know if you guys can see, but if you click on this, I didn't know this till now. Actually, you can actually like hide it. That's cool. I didn't know that. So let's look at the red bar, for example. It's going up, right? So that's the inventory is going up. That's good because the total asset base is going up. So hopefully revenue is going up too. We're only looking at balance sheet. But have you noticed like one thing that's sort of drastically changing is this thing called marketable securities. So something happened in Q1 of 18 that made this go like just almost double, right? This thing went like from here to here, like almost double. So you're gonna have to do some investigative journalism, investigation to figure out what happened, and also cash and cash equivalents. What happened? Well, I'm assuming they use a whole bunch of cash to buy these securities, right? From just looking at this, obviously, we don't know that. Of course, you have to look at cash flow statements and all that stuff. But if you notice the blue bar all the way on the bottom, the cash and cash equivalents going up. Oh, so that's good. That means they're making more money. So something happened. Q4 17, they spent a whole bunch of money buying securities, right? So this is sort of like the storytelling that you can kind of build up. So what do you have to do? Well, you're gonna have to look at their 10K or 10Q whenever this thing was released and find out what happened, right? They bought a whole bunch of stuff. Anyway, this is getting a little bit long. So what I'm gonna do is I'm gonna pause here for this episode. I'm gonna probably continue on the next episode. Anyway, I hope you guys kind of got some benefit out of this. Right now, it's mostly still plotting and stuff like that. Once we start doing ratios and stuff, we're gonna start saving data and start comparing data. We're not gonna do any like smart data sciencey stuff. I think until much later. Maybe not at all. It's nice, kind of an overkill, really, to kind of apply all that craziness. I mean, Warren Buffett, he's not a data scientist, right? He's just a guy who knows how to read numbers. So, yeah, I'll just end it here. So, that was long. If you have any questions, comments, concern, make sure to leave it in the comments box below. If this is the first time watching it, make sure to subscribe and remember to thumb up. Tell your friends, tell your mom, tell your dad, tell your accountant. Anyway, all right, see you in the next episode.